Hello, good morning. Hello, hello. Give you a moment to get on. Let me get my notes in front of me. Happy Tuesday. Yes, it is Tuesday. Y'all know I have my moments. I don't know what day it is, but I know today is Tax Tuesday. So, hey, Dina, good morning. Give you all a moment to get on. And if you get value from my live broadcast, please share them out. Spread the wealth. And I certainly do appreciate it. If you are watching the recording, feel free to skip ahead a little bit to get to the content for today. Hello, Juanetta. Don't get fired up over there, girl. All right, so I want to welcome you to the Daily Revision Morning Show. My name is Lysandra Everett, and I am your host. I am here Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about various topics, mainly tax topics, because I am a tax professional, and we need to learn more about our taxes. Holy cow. Okay. But we'll also hear business topics, leadership, and that kind of thing. So you'll hear a lot of various topics when you tune into my show, and I certainly do appreciate you. So today's topic, your clothing is not tax deductible. So here's the scene. I had a client who works at a local retailer, right? And they have a requirement to wear a certain type of clothing, okay? So let's take, for instance, someone who works at Target or Walmart. You see them, they have either a red or blue top and khaki pants. Now, and they're saying, okay, well, this is what I'm required to wear to work. Why is it not tax deductible? Well, it's not tax deductible because although it is kind of a uniform, it really isn't a uniform, because you can wear a blue shirt and khakis anywhere, right? You can wear that, to go out on a regular day or what have you. So that is not tax deductible, and it's the upkeep. If you dry clean your clothes, that is not tax deductible. It only becomes tax deductible when you have a uniform. Okay. So if you look at, our service members, police officers, firemen, that kind of thing, they have a prescribed uniform that they have to wear. So when you have to invest in those uniforms, whether, buying new uniforms or the upkeep of those uniforms, having, name badges or patches or whatever sewn on or anything like that, those expenses are tax deductible because that particular uniform can't be worn anywhere else. I can't wear that and go work at Target, right? Because there is, something else. So when we're talking about uniforms in that respect, then that is what's tax deductible. Now, if for my home business owners, I want y'all to listen up. Now, if you get a shirt with your business name inscribed on it, then the upkeep of that particular item becomes tax deductible. So if I have a shirt that says Everett Tax Service on it, then that is a prescribed uniform. I can't wear Everett Tax Service and go work at Target. I got Target on the brain, don't I, y'all? Okay, but I ain't going though. Okay, so then that becomes a uniform, and the upkeep for that particular item of clothing then becomes tax deductible. Now, if you are traveling on business, if you're traveling and, if you are an employee and you are traveling for business, or if you are a self-employed person and you're traveling for business and you have to get your clothes laundered while you are away on business, that is a tax deductible expense. But just every day, I got to be cute going to work, that is not a tax deductible expense, so I had to break some people's hearts when it comes down to that thing. So yeah, the place that you work might say that you need to wear a white shirt and black pants and, and black shoes. That might be the prescribed wear, but because you can wear that anywhere, because that is regular street clothing, that is not a tax deductible expense for you. However, if you have a position that has a particular uniform, like I said, for armed services or something with a monogram or a company shirt that you have to buy or anything, that then becomes a tax deductible expense. So as much as you'd like to deduct those things, and there's a ceiling. It must be anything over 2% of your adjusted gross income. So if you have a $50,000 a year adjusted gross income, okay, so let me do some math on that real quick. I should have been ready, right? So if your adjusted gross income for the year is $50,000 times 0.02, that means you have to spend at least $1,000 on your clothing before anything becomes tax deductible. Now, when we're talking about buying uniforms and such for, police officers and service members, let me be the one to tell you, you can spend a grand real easy, okay? Because one of my husband's uniforms, oh my gosh, y'all, when he got promoted, let me tell you, wait, I gotta laugh, hold on. Okay, so when he got promoted to lieutenant colonel, his uniform changed slightly, which meant he had to get a whole new uniform. And during that time, he also shrunk a little, right? So in order for him to replace that uniform, by the time we were all said and done, we spent about $800 on that one uniform, okay? So, but it just depends on your, on what your profession is. And if, like I said, I done pushed some button. Okay. I got my printer going off, scared me half to death. So that's the deal with, with deducting your clothing. Now, although this is kind of a tangent type of thing, if you have to purchase something for your job that you have to have that is not issued to you, so, those things may be tax deductible, and that would be on a form 2106. As an example, I have a police officer that is one of my clients, and they have to supply their ammunition, which I had no clue about. So it is a requirement for the fuzz to have some ammo, right? So that is a deductible expense for him, and that would be on a form 2106. Okay, that's the form that you need to deduct any work essentials like that. So form 2106. Okay, so I want to share some deadlines with you before I go. All right, so for my friends who have a corporation, C corporation, the filing deadline for you is March 15th. For the rest of us, regular people, our deadline this year is April 18th. Do not wait until April 18th to file your taxes. Don't do it. Okay. So that's it. So March 15th for my corporations and my partnerships, and April 18th for everybody else this year. But like I said, don't be waiting that long and then get mad because everybody and their grandmama is trying to file their taxes, because y'all been knowing April 18th has been coming since at least January 1st. Just saying. Okay. So that's it for me today. And by the way, and of course, one thing that is required to be able to deduct your expenses is documentation. You need to keep those receipts, put them in a folder, tape them to a piece of paper, do something. You got to have your receipts in order to substantiate your claim. Okay? So thanks so much. That's it for me for today. Make sure you subscribe so you don't miss anything, and share this with somebody if you got some value. Hey, Teresa, how are you, hon? I didn't say good morning. And hey, cousin Theodore, I love your post, dude. Okay, I gotta go. I'll see you guys next time. Bye.